Good afternoon and welcome to NYFP. In midday trade, the major U.S. stock averages are back up at least 1%. Joining me now is Ben Willis of Sunrise Securities. Hi, Ben. Thanks for joining me.
My pleasure.
Well, it's been quite an eventful morning so far. We had the ECB cutting rates, Draghi speaking, and then the Greek referendum being put off. What do you make of today's action?
This makes the Greek tragedies we were forced to read look like nothing. I mean, it's just amazing the whipsaw action. We're still in a fear-based market. We're still in a headline-based market. He said, no, he didn't. Yes, he did. No, I didn't. I think the big surprise, the takeaway from today, if you can eliminate Greece, so to speak, is Draghi and the rate cut. He certainly introduced himself to the world stage with that move. So I think that's the positive. Some of the economic data we saw positive. So we'll hold on to our hats for jobless claims tomorrow, the unemployment rate, but in hopes that the words out of the EU and particularly Greece and Italy calm down. But you never know. I mean, when somebody reacts over there, these markets are wild and volatile.
We're only halfway through today's trading session, and already we've been seeing choppy trading. But going forward to tomorrow's session, as you mentioned, we will be getting that jobs report. If we get numbers in line with expectations, do you think that will affect the markets at all?
I think it'll help us stay positive. I still think, even with all this noise we're seeing, we're still in a positive trend for the end of the year. I think equities are starting to find their place as an asset class that has been underrepresented in most portfolios. But you know, with the fear, you have to overcome all that's going on in Europe. And I mean, the denizens of the economic ivory towers telling Europe how they're supposed to work. I think Papandreou played it and said, "Do you think this is going to work? Let me show you." And I think that was a wake-up call to all those who said, "Oh, you just need austerity, you just need to collect taxes." Well, that's great when it's all, if you can say that from your ivory tower, but the actual execution we know now is nowhere near that simple.
And Ben, speaking of fear, earlier this morning we saw shares of Jefferies tumble and trading was halted. But that is interesting because it does reflect the fear, and especially on the heels of MF Global. How much exposure do you think some of these broker-dealers have?
Well, it's hard to say, but I would, based on the fact that we have deleveraged broker-dealers and traders around the street for the last 3 years, quite frankly, I think Jefferies has done a pretty good job putting out their actual exposure to anybody who wants to see it. You know, the funny tongue-in-cheek rumor on Jefferies this morning was that Corzine was going to Jefferies. I believe the protections are in place for the broker-dealers, and they don't have the leverage they used to have. So that is the safety. I think that was the biggest issue we took away from the crisis in 2008. To buy a stock, you had to put up 50%. I mean, it's that simple. The rest of the markets didn't always play by those rules, and they found out that the fact that we've been doing this for over 200 years, it might be a good rule to follow. So, but you know, it's again living through the fear of what was going on, just like 2008. Somebody's name gets thrown out there, right or wrong. I mean, they did the walk of fire with their stock, and we'll just hope that everything recovers. I've got friends at Jefferies, and it's very unfortunate to watch what's happening right now.
Okay, Ben, well, thank you so much for your time today, and thanks for weighing in on all these topics.
My pleasure.